Welcome to MarketTamer.com. You're looking at a chart of the S&P 500 with about 8 hours to go to the open on Wednesday. And we were noting this chart intraday. We were keeping a very close eye on the price action to see if it would end up below the 5-day moving average. It has done so. We're looking at the 5-day point down. That tells us short term we're looking bearish. Obviously, we have the 20 and 50 days still pointing higher. So in the medium term, we're still bullish. But in the short term, there is a very obvious correction here looming. Now, whether it materializes or not is a separate thing. If we look at the futures tell us that the market is looking to open marginally higher. Now, there's a good 8 hours to go before the market actually does open, so a lot can change between now and then. But even if we do get a marginal positive opening, that is not a positive necessarily for the overall market in the short term. Why? Because that 5-day moving average, which has acted as strong support all the way up on this uptrend, could soon act as resistance on the downtrend. With that said, let's take a look at the banking index. We can see here that the BKX, the bank index, has actually had a big down day, down 4%. And you can see that's off the back of a tremendous run up here from around the 36 area all the way up to around 46 at the peak, almost without stopping. So not surprising to see a big pullback here. The 5-day is slightly pointing down. It's relatively flat given the magnitude of the up move, so it's not necessarily as strong a bearish signal just based on that, based on the 5-day, but based on the percentage change, it is a strong bearish signal. That is a high open and a very low close, down 4.35%, so keep an eye on that one. What's holding up reasonably well is the retail holders. Take a look at this price action. Obviously virtually no change in spite of the down day. That tells us that retail is somehow holding on better than the rest of the market, which is interesting at this point in time and might give us some indication as to consumer strength later on when we see those numbers reported. If we take a look at the technology stocks as represented by the NASDAQ composite, which is primarily tech weighted, we see that this bearish signal did materialize about 3-4 days ago, and then we had the reversal. We noted that at the time, and again we've had a bearish signal today. So when we get bearish signals, we did update you with a video earlier today, which hopefully many of you got a chance to see, and it was about a famous trader, still famous trader, but certainly famous back 20 years ago, Paul Tudor Jones, who was famous for his macroeconomic views. But the other thing that should really have come across, and hopefully did in that video, is that it's always going to be the case that we'll be wrong at some point. For example, we see a bearish signal here. That does not mean that tomorrow it can be canceled. In fact, that's what happened earlier this week. But that's okay. We're not necessarily worried about getting in on a bearish signal and being corrected by the market very soon after that and taking a loss based on the short-term trading system. Obviously, based on a longer-term trading system, we typically enter into an adjustment phase. Based on the short-term system, we're okay, given that it's more speculative, being more aggressive, taking bigger gains, and also suffering short-term losses. Now, why is that? Well, if we take a look at moves up, what we're looking at here in the July-August time frame is for a huge move up, which did materialize once we got our buy signal. Now, that doesn't mean every time we'll get a big move either up or down when we get a buy or a sell signal, but it does mean that if we stick with the system, once the big moves occur, we can really do exceptionally well. Now, that being the case, let's move to the very last chart here, which is the Dow Jones Industrial Average. I just wanted to highlight that is looking bearish as well, not with the same conviction necessarily as the S&P 500 or the NASDAQ, but still showing a bearish sign. And in fact, let's just show you one more chart, which is McDonald's, and I'm bringing this in just to highlight the strength in McDonald's at this point in time. In spite of the market being down, McDonald's has already had its down move, and it's actually showing strength. So with that, we look forward to seeing you at MarketTamer.com.